to the A.J. Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, A.J., whose primary mission in life is to help you become a better investor.
All right, welcome back, everyone, to the A.J. Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, A.J. Brown. And it's a special happy birthday to you, A.J., on this beautiful May 20th. How are you feeling today?
Options expiration, that means we are getting our paycheck today, so I'm feeling pretty stoked.
That's right. All the positions are locking in. It's Friday, another wonderful year under the belt. And we've got a lot of news, a lot of action going on in the markets. So let's dig right into it. Let's maybe bring up the S&P 500, see where we're at compared to what we've seen last week.
You know, the S&P 500 teased us yet again. So as you can see here, we're always looking for a confirmation of a bottom. And we had that one, as we had discussed in previous shows, we had that one that was going to hint at us at giving us a strong uptrend, and that was a tease. Then we had one that was going to hint at us giving us some sideways channeling, and that was a tease. And then we just had one a couple days ago that was going to tell us that, hey, we're taking a break from this pullback. That was a tease. So it looks like money is flowing out of the markets, at least when you're looking at that S&P 500.
Yeah, we're continuing to sell off, and this week it's been primarily due to a lot of the retail numbers. And before the show, I asked you if we had any retail plays. Sounds like we don't, but maybe it's worth taking a look at. Some of the big names this week were Walmart, Target. I think Ross for Less this morning. Yeah, look at that big sell-off.
I mean, we're talking about these are like earnings plays, right? So what we're seeing here with Walmart, Target, and then this morning when we look at Ross Stores, these people are missing their earnings big times, right? They gave guidance and then they missed it. And so what's happening, of course, is investors are selling off, and they're selling off big time.
Yeah, and it's bleeding into the market. So, I'm wondering what we want to take away from that this week. I know that part of trading options is having the ability to make money on the downside, make money when the market's going sideways, and so
Sure.
we actually have a special guest on the show that is going to maybe help bring some light to these things that we're seeing, and maybe
Let's introduce him.
Let's introduce him. Yeah, from what I read in the bio, let me just read the bio real quick before we bring him on. Mr. Norman Hallet, right? It seems as he's been trading since before I was born. And now he's running a very successful mentorship, coaching, education program. I'm going to go ahead and pull it up on screen here. The Disciplined Trader. So let's go ahead and bring Norman in. Because I've heard great things and I'm excited to meet. So let's bring him in. Hello, Norman. Can you hear us?
Yeah, let's go ahead and bring him in. That must be me.
Oh, hello, Norman. Good morning, Norman.
Good morning, gentlemen. Really great to be here.
Overall, let's go into what you're seeing. What are your students? What are your customers telling you as a veteran of the market for such a long time? What are the components that newbie traders, intermediate traders should be looking at going into the summer?
Well, I think you've already named some of the issues that I don't know that I've ever seen a market with so many layers of negativity. The supply chain issues, fighting in Ukraine, of course, the inflation. And more than anything else, I think there's an umbrella around the market that is, we're moving from the industrial age to the technological age. I mean, we started about 10 years ago, 15 years ago, and now we're in the crux of it. We're in the job-changing crux of it. I mean, here we have unemployment down in the 3% area, and yet there are many jobs that are going unfilled. It kind of doesn't make sense, and some of that reason is because there are jobs that need to be filled that weren't yesterday's jobs. For instance, coal. The whole coal industry is likely to all but disappear 25, 30 years from now. At least the uses of coal different than energy. All the new alternative energies will have blossomed and so on. So in this change, there's a change of careers. There's a lot of people in that 35 to 55 bracket where all of a sudden they're not seeing the future in their careers that they did before. So you've got that umbrella that hangs over the market, that shift. Half of politics are trying to save the coal industry. The other half is realizing that the future is not in coal. So there's a lot of stuff going on. And as far as the summer is concerned, I think that we're probably going to see an acceleration or continuation of the volatility. And really, that's my area. What a trader does when the market gets volatile, and what they do is they amp up their fear, and this is not a good thing. And that's why we're getting flooded with a lot of traders who are trying to control their fear and take advantage. I mean, we all know that volatility is opportunity for traders. I mean, AJ is probably, I know you're jumping up in your seat, talking to everybody you know about the opportunities and the flexible premium prices in options. But you have to have a plan, and that plan needs to be followed. We all know that. But with the advent of volatility, it becomes harder and harder to control. And that's where I've done most of my work, helping traders to stay calm and collected and follow their trading plan. And it's not an easy thing because most traders don't like to look inside. They think maybe their plan is wrong. Most have pretty good plans. It's just a matter of controlling themselves to run the plan.
Yeah. That's right.
AJ, you got anything to add? I know you're a big advocate of plans.
Yeah, I mean, make it all rules based is what I'm all about. It's funny that Norman brought up that conversation around coal, because I remember how big. I've been looking at industries in the past that have gone away, like for instance, the industry around whale blubber for lamps. That was a whole huge industry where they would be bringing in whale oil to light lamps, right? And that went away. Another industry that went away, of course, is like the guys. There was a whole segment of people who went around lighting the street lights at night. That's gone when electricity came around. So we're on the verge of a big change that's monumentally. But like Norman pointed out, there's so many jobs, but they're in fields that there's people not trained for. So what do you do about that? That's interesting. Back to the markets. I mean, looking even at the retail sector, I think one of the key things that you have to think about as well when you're approaching earnings seasons, and I just want folks to think about that, is if you're not confident, right? It's always a measurement of your confidence about what's going to happen. And around earnings season, a lot of times our confidence, you can't justify a lot of the decisions. The easiest thing to do is, right, go back to an all cash position and then, weather the earnings that way instead of what happened to a lot of the folks in the retail sector. So something to think about is, sometimes the easiest adjustment to make is to take positions off the table, right?
And that was big news this week. That Warren Buffett is like holding all this cash, not really knowing what to do. But as the interest rates are increased, cash isn't the worst position. So with that, what we're going to do next is we're going to go into some specific names, some specific industries, and we're going to get AJ's feedback. We're going to get Norman's feedback. We'll do some technical analysis. Anybody watching live that has a specific stock or industry that they want the gentleman to look at, feel free to drop it in the chat and we'll go over it. But before we do that, we're going to go ahead and run our commercial to invite everybody to AJ's workshop. I went ahead and added Norman's website to the chat as well. If anybody wants to go sign up, go learn more about Norman. The link is there. And then once again, if anyone has any questions, feel free to drop them in the chat and we'll try to get to them as we can.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So with that, one of the topics that we've been discussing in the past, AJ, is energy, right? And so I feel like maybe that's something we could go into, not to say that gold is energy, but it is a commodity and it has been this flight to safety. And so I know that Norman is a big futures guy. On our end, the ticker that we look at is GLD. So who wants to go ahead and, Norman, what are your thoughts on gold?
Well, they're very positive right now. I mean, gold is. We know inflation is here. We know that it's going to affect us and be in the news for at least the next 6 months or a year, and it takes time for that inflationary energy to dissipate, especially with the supply chain issues and other things that we're having. So I expect inflation to continue to be a story. And, many people have been disappointed in gold, but I think that with its lack of response to inflation, but I think that those that have traded gold for a long time know that there's a delay. There's a huge delay, sometimes as much as a year or 2 years before it reacts to a situation like this. And so I'm noticing on the chart a bottoming type of a pattern. I don't know can you see my chart here at all?
Yeah.
Okay. What we're looking at here is, recently we have the downturn but we see all this support, and then this is basic. This is a daily chart. This is basic support in this area, and I want to show you one particular setup that I look at. This setup right here, where you have a small body, followed by a strong move, a strong body through the 8-bar exponential moving average. This is a very strong signal. In this case, to go short. Here, the reverse of that would be a strong signal to go long, and you can see it here. You can see it here. You see it here. It's a very consistent signal. The other line that you see here, the other exponential moving average, is the 34. It's more of a guardrail. When the market moves through both, you usually see continuation, as you're seeing it here. You watch the trigger and then the move through both. So from a technical standpoint, I see 2 reasons to believe we're going higher in the long term or in the short term. The nice trigger that I've just explained to you, and the fact that we're doing it against several testings of the bottom here. So I see a run at least to this 1880 level, which is the 34. This is usually got. If we break through here, this could be the beginning of gold responding to what we're seeing in the news. So from a technical standpoint, I really like starting to build right here on a long gold position.
Wonderful. And so, AJ, on your end, right, you're not going to be looking at the futures contract. You're going to be looking at something that trades with or along with the futures contract. Am I right?
Yeah. So, if for us option traders out there, we've got a couple of different ETFs that track the gold. So you might want to write down these tickers. Now, of course, there's the GLD. And if you're doing anything directional, the GLD is fantastic because you can just kind of leverage those moves with some of your options. But another one that's interesting is the IAU, which also, as you can see, it's a very similar chart. But what I like about the IAU is that it's in that price range so that we could start selling some premium towards it for those people that don't have monstrous portfolios. So we could do the same thing. I actually put the same exponential moving averages that Norman, and Norman, what is the significance of the 8 and what was it, the 34 that I put in here?
Well, the 8 is what I consider a golden moving average. It's a moving average that when you get a moment, when you start to build momentum and you start to establish a trend, as long as you stay on the on the correct side, the bullish side or the bearish side, I think you know what I mean there.
Yeah.
As long as you stay above the 8, that run should continue. In fact, some of the best places to add is when the market comes back, moves away from the 8, and then moves back to the line and holds there. Now, those are great places to add positions. But the idea is that it's something. Once it breaks, especially if it breaks with a trigger, a reversal trigger, and one of the triggers I showed you, then that's where you would take your profit. The 34 is more of a guardrail. I've learned to use the 34. It's a Fibonacci number, and I'm a believer of Fibonacci, and I believe in its holistic truth, the fact that it's a universal truth. And I think that anybody who has a trading plan that uses Fibonacci really shouldn't be using it just because they like Italy or whatever. They should be using it because they understand that it's a universal law, whether it's a spiral galaxy or an arc shell or the waves breaking in the ocean. It's the same open circumference divided by the radius gives you the same kinds of Fibonacci truths. And so I believe that and you can see in the case of gold where it tests the 34 without going past it and then resumes the previous. So it's something where I won't reverse a position unless I break through that 34. If I break the 8 and I head toward the 34, I'm usually out of the market there, waiting for at least the break of the 34 or a re-break on the correct side of the 8. Yeah, so that's how I use it.
I like that. I like that a lot. Yeah, so if anybody is interested in doing some options, the other good thing about this is, like I was saying, if you're using the IAU to track that gold, the beautiful part is so say for instance, at this point, what Norman's saying is, for instance, if he was shorting this or if he was buying some put options, this would be his exit signal. And then when he gets above, or if he breaks above that 34, that's going to be potentially a long signal or buy some call options or anything like that. So say, for instance, we're at this point now and we're waiting for that signal. What a cool thing is if it doesn't go as far as we want, we don't have to necessarily sell that long position or that back month call option. We could actually, sell some front month options to kind of offset our costs, get a little bit of a little reprieve. And that's kind of what my specialty is, making those slight adjustments in order to keep the position going as long as possible.
Mm-hmm.
So lots of good stuff there.
Mm-hmm. I like the sound of that. I think, in options, we have a number of option traders that use that particular trigger to initiate, to start to initiate options in that direction, because it's a nice early trigger. So yeah, I mean, the earlier you can get the premium before it expands, the better you're going to do. So.
And I gotta ask you, Norman. So I've been seeing, especially as the Fed has not only been raising interest rates, but they've been talking and hinting at starting to sop up that 4.5 trillion up to 9 trillion. But I know that they've been putting that 4.5 trillion of quantitative easing. They want to sop that up and basically sell all that stuff that's on their IOUs. I've been seeing the needle quickly move. So the needle had moved away from bonds because bonds have been worth nothing for like the last 5 years. And so all of a sudden stocks had become that, that commodity that was like safe, like bonds used to be. And then the risky thing was things like crypto and investing in SPACs and investing in REITs and all sorts of crazy investments. all of a sudden with this recalibration, I mean, it's a very fast recalibration, but the needle has gone back to where stocks are considered risky, and we're actually seeing money, not only are we seeing things like crypto collapse by like 25% in a single trading day,
Yeah.
but you're seeing even some money come out of stocks, and it's going back into the bonds. The bonds are starting to go up. And like, I agree 100% with you. You can't get away. Like, the difference between, like, for instance, crypto and gold is actually something. Crypto is magic. It's just what a lot of people believe in. But as soon as the needle starts moving, people want substance. So I agree with you that people should keep their eye on gold. But what about this 30-year Treasury bond?
Well, the 30, the thing about bonds is that when it starts to take a direction, it will take that direction for years. And what's happening, of course, is when interest rates start going down, they'll keep going down. Once they have 2 or 3 increases, you can expect the bonds to continue in that direction for a very long time. And it's the ebb and flow of preventing inflation and all the reasons why. But we are now we've now flipped from looking to go long the bonds to looking to go short the contract. And just recently, if you look right here, here's that trigger again, that where you have indecision followed by a decision through the 8-bar exponential moving average, and then another confirmation of that through the 34.
Did we lose Norman?
Technical difficulties. We'll see if Norm looks like his internet might be looking a little abnormal. So we'll see if Norman comes back. AJ, you have any thoughts on the bonds? I know we don't really ever talk about bonds.
So, well, we have mentioned it, right? Because I've been kind of hinting at the fact that bonds are going to start, that needle is going to start moving to where bonds are now something that people want to have in their portfolio again. And that money's not going to come from nowhere. That money is going to come from wherever it could be coming from their stock portfolio, or if they've been dabbling in other things like real estate or even, crypto, SPACs, all those different investments will probably see money coming out of there and going into bonds and commodities like gold. And so I actually have an ETF because I knew Norman was going to talk about these. The ETF I have for you is TBT. Again, in that nice price range where not only can just the average investor, trade this directionally with options, but we can actually be in the position of selling premium. It's at a nice price. So I'd like everybody to take a look at that TBT, and it wouldn't hurt. Norman uses that 8-day and that 34-day EMA. It wouldn't be a big deal, Cyprian, for people to start looking at those 2 EMAs like Norman does and see if that gives them a different view on things.
Sure. And we got Norman back. So, Norman, I'm not sure if you wanted to finish your thoughts there, but AJ was basically jumping in as on the ETFs the ETF side, right? The TBT.
Yeah, I was just showing the TBT, but let's go back and look at Norman's analysis on the bond itself.
Okay. Is that me? That's
we're not catching your screen there. So I don't know if AJ.
Can you hear me? Okay.
We can hear you. We can hear you. We can see you.
Okay, you can't hear me, you see me. No, don't worry about that. I think I've just shown the fact. I think the most important part was that the bonds tend to hold their direction for a long time. So, smart bond traders now are looking for places to short the bond market. The extent of where it's going to go, will be dictated by the technicals. But I think that most smart traders are emphasizing having the larger positions on the short side than on the long side. So just from a trader's perspective.
Nice.
Yeah. So as AJ, I went ahead and maxed out that TBT, and the consensus is going to start to pull back. Is that what you guys are saying?
So TBT is opposite of. So if you looked at Norman's chart with the actual bond, you can see that this is almost the mirror image, right? And so similar to what Norman was saying, people are starting to line on this finding a top, right? And so similar to this, I'll go ahead and circle it right here. We got that exit signal that Norman's talking about, getting, dipping down below the 8. And so the guardrail here is this 34. And so he's looking for a drop below this 34 to signal that, shorting it or finding some directional, like back month, I would say deep in the money, far out in time put options that we could use as a base. And those things would pretty much, depending on the delta, those things would pretty much go, in lockstep with the drop in the bond. And then if something happens, say, for instance, the bond takes a reprieve, and we can analyze this. It's all about planning for it. But if it takes a reprieve, instead of ditching that long position, what we could think about doing is selling into, selling some front month near term, take advantage of all the beautiful parts about options, responding to the amount of time to expiration. And gosh, we've got to talk about that volatility thing that Norman brought up earlier at some point.
And that's your forte. Well, not volatility, but volatility certainly helps all of your strategies, AJ. Is that not the case?
It absolutely does, right? Because we focus on selling premium here at Trading Trainer. We love selling premium because for the most part, everybody talks about death and taxes being true, but the other piece about being true is that an option's the premium component of an option is always going to expire worthless. When expiration date comes, so is the premium component of an option. It's going to be zero no matter what. But the beautiful part about volatility is that if we're selling that near-term option, you look at some of these different time decay curves for an option. I'm just going to draw them. They look like this, right? And so we like to sell them so that we get the biggest bang for our buck. We make this amount of money and then it expires worthless, right? But when volatility comes along, as Norman says, that fear, how do you harness that fear? Well, with options, it's wonderful because people are buying into these options. Options are a hedging asset, and they're raising that price, but it doesn't matter how much they raise that price to. As soon as the option expires, it's worthless. So for us, when we sell our premium into a volatile market, we wind up making even more money because we're on the correct side of the equation. We're selling into the selling into the fear. And that's, a volatility rush gives us a lot of money.
Yeah, and it's interesting that you talk about fear, because it's really the fearless that are taking from the fearful, especially when it comes to options. I mean, when we deal with our specialty is really dealing with traders' mental and emotional issues, and when we deal with the avenue of fear, there are 5 basic steps, and I'll just mention them quickly. One is to be comfortable with the risk. And you've just and this is really where we've met, and this is almost where we've had a lot of our conversations, AJ, over the years, and that's how can we continue to minimize the risk but not take the top off, not give not take away the opportunity, and that's the way you construct options. I think people who have worked with you know that that's your passion. So being comfortable with the risk that you take when you put on a position, that brings down the level of fears, that brings down the cortisone level. To be confident in the why of your plan. Why are you doing what you're doing? What's the basis for it? And you got to believe in that basis, not just because somebody told you to do it or somebody gave you a track record. That's why when somebody gives you a trading plan that they've made so much money on and they give it to you and you lose money, you can't understand why it's happening. It's because it's because you really don't understand the why of what's happening, so that when you come into conflict, that's where you start to do the wrong things and make mistakes. So you have to be confident with the why. The third thing I like to suggest to traders is that they look back on what if they had followed their trading plan yesterday, would have been successful. And when they see that it would have, they can be confident in what they can project, that positive expectancy going forward. And if they look back and it was a losing day that day, look back 2 or 3 days. And after the third day, you'll see that if you traded over time, you will be successful. So the idea is that you can forge your positive view of your trading plan by looking backwards, and then it's easily projecting that positive expectancy going forward. And the other thing is the two other things. The first thing is taking breaks. We all talk about taking breaks, but when I say take a break, I mean leave the computer. If things aren't going right for you, step away and leave the computer. It's almost like rebooting your computer. You're clearing the conflicts. And when you're not doing well in trading, it's usually not your plan. It's the fact that you have so many conflicts that you need to clear. So if you can get away from it, go make lunch, take a walk around the block, but do something other than trading and come back clear with conflicts. You'll be just like your computer. You'll run more smoothly. You run with more speed. You run. So taking breaks when it's not going right for you. It's a big thing with the late Joe Ross. Talked about you can always measure when you're doing poorly in your trading. It's usually because something is going on inside of you that's poorly. And the fifth thing is to identify A+ triggers. I just showed you one with a doji or a spinner with a small body, followed by a momentous a body that's significant moving through the 8-bar exponential moving average. That particular trigger I have identified as an A+ trigger. I know that when that happens, it's at least 65-70% likely to continue that immediately. And so if you look back on your trading plan and the way you construct the processes and options, for instance, and you look on how you can see which structures work most of the time, more of the time than others, and identify those as A+ trades. If you can do that and commit to identifying and then sticking to those A+ trades, what's going to happen is you're going to trade less, which is great. And for you accountants out there, it means that you have less transactional costs. And it also means that you'll be putting the odds on your side because you've already seen that you're dealing with higher probability instances. So doing those things, those 5 things, that will bring down the fear and allow you to control yourself. Because when AJ and I talk about the market, we talk about the tremendous opportunity that there is. This is the time that traders live for, and you have to be committed and strong in those 5 areas to keep the fear down, to run your trading plan. So that's really what I like to talk to people about when they talk to me about fear.
That's amazing insight, Norman, and I love the psychology component of it. So once again, if anyone's interested in learning more about Norman and his strategies, his tactics, the link is in the chat. Go ahead and head on over there, learn more about the disciplined trader. At this time, we do have a few questions from the audience. We have a live one, AJ, that I think we'd love your analysis on, and that's ticker symbol PBT from Wade is just wanting to know your insights on that.
All right. Well, PBT has popped high, hasn't it? As of today, Permian Basin Royalty Trust. So this is a Permian Basin is an oil play, an energy play, I believe. And so you had this sideways movement, which, let's see, it was trading somewhere between a level of support, probably around 11.5, up to a level of resistance, probably around 14. And so there was great opportunities there for selling your premium. And I'm not sure, Wade, what side of the equation you were on. In other words, had you shorted PBT and then you were selling put options every time it hit the level of support, or had you gone long PBT and sold call options? So if you were short PBT, then this is probably what has happened. Your protective call has kicked in, right? Because every time we sell premium, we buy a protective option. So if you sold a put option, you would have created a kind of collar here with a protective call, and your protective call is kicking in right now. And if you're, kind of on the side of a little bit of elegance, you might have also been stopped out of your PBT position. So now your protective call is going through the roof, which is nice. On the other hand, if you were long PBT and you had been selling call options, well, you're going to get exercised at profit at this point. And I wouldn't be, one of the big, and maybe Norman can talk to this, but one of the biggest fears about people with traders is when they see a gain that their plan tells them that, hey, you're going to get exercised and you're going to take this amount of profit, and they start to have FOMO. They're like, but I see all this additional profit that was on the table, but your plan was always that you would get exercised out at 1450 and take the 30% or 40% ROI. So you can't start to cry over spilled milk that never was on your table to begin with, right? Your whole plan was that if anything ever broke out of this channel, that you'd take your profits and run. So now that you're seeing this, that would be a whole new trade. And I almost have to say to you that this trade has already left the station. It's almost like you have to wait for something new to happen for you to create a plan around. We don't want to try to trade today's high movement unless you were prepared to trade the breakout. What are your thoughts, Norman?
Well, I think that anytime you take a profit or close out a trade, you have to learn not to look back. There's a whole segment of thought, and most professional traders really haven't defined this, but they view their trading as a business. Yeah. When they win, when they take a profit, they don't consider it as some kind of a fluff money. A lot of young traders, new traders will take a profit and then do something a little bit riskier than normal because, hey, they can give, it's only profit and they can give that back. A business person will
it's cash flow.
The profit is necessary. Once you offset a trade, that's part of now your core assets. In the same way, when you lose in a trade, when you offset a trade and it's a loss, you don't linger on that either. It's very similar to putting in. I remember when I was in the restaurant business, we'd put an ad in a magazine and nobody would come. And they're not going to give me back the money in the ad, but we knew that we shouldn't do that anymore. We moved on. So when there are certain, I look at losses as cost of doing business when you're trading, and I look at profit as growth in the business. So you want your business to continue to grow. So I think if you frame your business, your trading as a business, and I don't mean you have to incorporate, although once you start making money, there are some things that you probably want to do in order to have more favorable tax treatment. But until you get to that point, just framing your business mentally, but framing your trading mentally as a business can really help you to win, because really what we're trying to do is we're growing our business, and our business is our trading account. And so you start reading business books on leadership, you start reading entrepreneurial books. You're an entrepreneur as a trader. I mean, there's no two ways about it. You're a business person and an entrepreneur. And even though you may not have anybody to lead because it's you and the computer, you lead yourself. So I read, in the beginning, I used to read books on leadership and et cetera, because I knew that I was the only one that was in charge of what I was doing. So treating your trading as a business, I think, takes care of a lot of the issues, including the one that you've mentioned, with dealing with trying to avoid fear of missing out. Look, there's always another trade. There's always another. Listen, I do it every day where I'm always always seem to be in the wrong market, but that's okay. The market I'm in, I do fine with, because I follow my trading plan. You learn to do that over time.
That actually feeds right into that question sip that we got from our 10-year-old viewer.
That's right. We might as well dig right into it, since we've got some amazing disciplined insights here. And the specific question, AJ, and I think all traders, new, old, I mean, Norman, you've been doing this since the 80s, is how do you stop being sad when you lose money trading
And investing, yeah.
and investing?
That's
that
Manny.
emotion. Yeah, that emotion.
Manny, whoever you are out there, I love you. Does he always ask questions? This is not the first time?
No. Manny is a long time. I think he's been tuning in since like episode 10 of our show.
Manny, I have to let me just advise you right up front. Separate what goes on in trading with your life. You're a good person and just as smart and caring, no matter what happens on a daily basis to your trading account. Now, that said, the more you can train yourself, and a lot of it is training your mind. I haven't talked about things like meditation and emotional freedom technique, and some of the things that we use to help a trader between the ears, because that's really how you respond to things. But the idea of separating yourself from your trading is important. But I will say that when you become more patient with your trading, you work on that. You wait for the A+ trades, as I've suggested that you do, A+ setups before you take a trade. You're going to wind up seeing that the success that you have starts to make you patient in other parts of your life, because you see it working in trading. So from one standpoint, you can't separate. But from an emotional standpoint, the winning and losing part, look, you're 10 years old, you're asking all the right questions. And I think hopefully they'll lower the trading age to 12, so that you can start risking your allowance. I don't know what the allowance was, but it used to be $1. It's probably more now. But in any event, I applaud you for asking that kind of question. Separate yourself from your trading, and that's how you're not sad. Listen, money. When something happens, we love our pets, and when something happens to a pet, and we have to bring them to the vet, and it costs us $1,000 or $2,000, my wife and I look at ourselves and we say together, that's what money is for. Okay, that's what money is for. Money is separate. Money is only, this whole thing about profiting in trading is so that you can lead a more fulfilling life, doing the things that you want to do. When I first met my wife, I don't know if I ever told you this, AJ. I met my wife. I walked into the car, and she says, "What do you do for a living?" And I was afraid to tell her I was a trader, because she didn't. That had a connotation. He must be a wild man. So yeah. I said, I'm a philanthropist, is what I said to her. Of course, I wasn't a philanthropist at the time, and I think she went home and looked up the word. But all the time, we're always talking about hey, you're a philanthropist, she says to you. Whatever it is for you, because giving winds up to be the thing that you really want to do in the end. The more you give, the better you're whole. So I'm saying, I know that's a huge answer to a very simple question, but separate who you are, maintain who you are. The stronger you are, and confidence in who you are, the stronger trader that you'll be, and vice versa.
Well, and when I first met you, I thought you were a pool player, a pool shark. Norman and I met at another trader's basement playing pool.
And so, AJ, what are your thoughts on the emotional component of losing money?
Well, I first of all, I think Manny's amazing. And I know that Manny's trading with his father, and so I'm pretty happy that his father is bringing him along on this journey, and maybe Manny can teach his dad patience and vice versa. Yeah, that's the key. I mean, the key is also back to one of the original things Norman said at the top of this show, which is having your plan and sticking to your plan and having that discipline, being that disciplined trader to plan things out first and then sticking to your plan. But, when you do that, especially if your plan is thorough, you have hedges against everything. You have an answer to everything. It's almost like I always think about Manny, whether you're a football fan or even somebody who's a historian of war, when you're trading, the scoop is, you wouldn't be a general going out on the battlefield without a plan A, plan B, plan C. And you make sure you have all these things and everything is already thought out. And it's just simply a matter of opening up your playbook and following the instructions. And yeah, you may suffer some losses, but that's all part of being part of the game. And when it comes to the end of the end of the battle or the end of the war, you're going to be ahead because you know that from following this plan. So it's all about sticking to the plan and having confidence in that plan. And again, Norman touched on it all, but that means that you have to understand the why behind your plan to begin with. And it's not just taking somebody else's plan, because so long as you have your heart in that plan and you understand that plan and you understand the origins of the plan and the why and the how and the when and there's no other way to then be successful. Yes, there's going to be this sawtooth, just like in a stock movement. There's always a retracement or a contraction as well as expansion. But overall, the expansions wind up weighing ahead of the contractions, right?
Yeah, and with such a globalized market now, there's so many strategies, so many things to trade. And so if anyone's looking for some answers, some strategies, some playbooks, that's why AJ created Trading Trainer. That's why Norman created the Disciplined Trader. It's so that you can join a community, ask the questions, validate the strategies, work with a team to achieve that investment success.
Yep.
And so with that, AJ, I don't think we're going to have time to do some of these questions
That's okay.
that we've got from the week, but we do appreciate everybody asking them. For anyone that we did miss, you got to get in there on the weekly, broadcast with AJ and the mastermind group, because they are discussing specific names all week, finding opportunities. But with that, AJ, Norman, any final words for the audience going into the weekend, options expiration, the end of May, heading into the summer? Any wise words?
Norman, you go lead it here.
Well, I think that, we've talked about staying in control and so on. I think that a trader has to approach every day with a positive expectancy. And I don't mean, I'm going to kill it today or whatever. That may be part of it on exciting days, but you have to believe that today is going to be a successful, positive, profitable day for you, which means today is the day that you're going to follow your plan without hesitation, without reservation, and with confidence that if you do follow your plan, you'll do well that day, and that day leads to the other day and the next day, and all of a sudden you've made it a habit. So the summer is here. Some of the best trading markets are in summer. It's the perfect time to start that trading habit. Start every day with a positive expectancy and review your plan, and also know that when you're trading, it's not a time to change or doubt your plan. I guess that's one thing that's very important. When you're trading, you're running your plan. You're not doubting a plan. If you believe that there's some tweaks that need to be made, that happens on the off days. So run your plan with confidence, and believe me, AJ and we're special people because we believe in ourselves and we help people, and so we believe we're special, and maybe that's why we are. But you're special too, and you can do this as a trader. You just have to put all your ducks in a row. And one of the reasons that I was really glad to say, hey, AJ, I'd love to be on the podcast is that where he comes from is a place of honest, total truth. And I don't mean just not telling untruths. I'm saying the truth about trading, what you have to be, how you have to act. And I just think you're in the right place at the right time. You're already doing a lot of the right things. Believe in yourself. That's what it's all about. So summer's coming. Believe in yourself. Lose a few pounds. It's bathing suit weather, and let's get out there and have some fun today.
And I guess my big, I'm a little bit more tactical, but I'm thinking May options are behind us. My birthday is behind us. I'm starting my 49th revolution around the sun here. I'm looking at June expiration, looking to see how I can sell June expiration, taking advantage of that fear because that's raising the price of those June options. So if I'm selling, I'm on the correct side of the equation. And I'm getting excited about the summer doldrums because remember, sideways moving underlying symbols, boring symbols means money for us premium sellers. So keep that in mind.
Amazing advice. Once again, feel free to learn more about Norman and the Disciplined Trader in the link in the chat. If you've enjoyed the broadcast, hit that follow, hit that subscribe, smash that like button. And hopefully we can bring in some more guests like Norman to really help break down psychologically things that they've seen, since back in the day. Some of us newbie traders, we do appreciate hearing those stories and learning about what, life used to be like before all these computers and technologies and things like that. So we appreciate everybody's time. AJ, thanks for, making the time on your birthday. I know you got a full calendar to
celebration, right?
To celebrate.
Lifting the new baby up and down. It's my birthday. It's my birthday.
What was I thinking? Oh.
Norman, appreciate the time. AJ, happy birthday. Thank you. Salutations, everybody. We appreciate you tuning in. We'll see you next week, guys.
Bye, everybody.
Thanks, gentlemen.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.